G'day taxpayers. The September quarter national accounts are slightly disappointing, I think it's fair to say. Quarterly GDP growth of 0.4%, well below expectations, which is disappointing. Annual GDP growth 2.1%, again below expectations. And even though it's the strongest annual rate of economic growth in 2 years, if we start getting excited about 2% GDP growth, we're looking at the wrong picture, I think. And it's really just signalling, to me anyway, that growth is still sub-trend. It has been for 2 years, and that the interest rate settings, restrictive, as the RBA says, are still imparting a bit of a dampening effect on the economy. We haven't had that momentum that we need to see to get the economy back on an even keel. That said, there were some encouraging internal drivers of the data in the national accounts. Household consumption up 2.5%. Good news. Business investment, as we saw in the CapEx numbers just recently, nice and strong, hooray. Dwelling investment strong, hooray. So that part of the economy that we do want to see economic strength coming along is coming through. So a little bit of good news there. We did see public investment declining by 3%. There's a lot of projects come to an end. Obviously, the CapEx on them from the public sector diminishes, and even public consumption growth weakened or slowed to 2.6% in annual terms. So a bit of fiscal consolidation going on in the public sector, taking away some of that impetus on government demand. Of course, government inventories also subtracted from public inventories, I should say, subtracted from bottom line GDP growth. A little bit of good news too. Productivity, 0.8% in the year, plus that is. So productivity starting to kick higher. Some really good news there. That's really encouraging. And already it's above what the RBA recently revised down their productivity estimate for. And that has implications for monetary policy too, if we're actually getting better productivity numbers starting to come through as the kerfuffle of the COVID problems start to wash through the data. But for the here and now, look, the economy is still below trend in terms of economic growth, despite that better news that we'd seen in recent times. We are still probably going to be seeing the unemployment rate tick higher, not lower. After the RBA gets this inflation concern out of its thinking, once we see these administered prices wash out of the data in coming months, I still think that the balance of probabilities favour strongly lower interest rates, and the rate hiking discussion that we've seen in recent weeks, well, we can put that to bed and put it into the bottom drawer where it belongs. So, slightly disappointing economic data today. Cheers.